Professors FM.
I'm Bridget Stomberg.
And I'm Lisa D. Simone.
And this is Taxes for the Masses.
Today's episode is on the consequences of the biggest public accounting firms offshoring some of their work.
Since the year 2000, the biggest U.S. public accounting firms have been offshoring some of their audit and tax work to employees of affiliated firms located overseas. In today's episode, we invite accounting PhD candidate Kaitlyn Kroeger to discuss her work examining the consequences of such offshoring practices. Hello, Lisa.
Hello, B.
This is a fun episode today for at least two reasons that I can think of.
Because you're sitting here in my office because you're here in Austin.
Hello. Yes, I'm very excited. We are in person, which is always the best way to do podcast episodes.
For sure.
We haven't been together for a while.
It's been months.
It's been too long.
Yeah.
So since we haven't talked in a while, I'm gonna leave it to you.
Okay.
Would you like to talk about the World Series, or do you want to talk about the election?
World Series, please.
So the Dodgers won.
Yes.
And it was exciting.
It was exciting.
Walk off.
Game one was just bananas.
Okay.
It was so great.
So game one was
great.
I don't know. I read something. Was game one the walk-off home run?
Yes.
Okay.
Grand slam.
Oh.
A walk-off grand slam.
Oh.
In extra innings.
Oh.
On their last out.
Okay.
It was phenomenal. It was so great.
Was there yelling in your house?
What do you think? Yes.
Okay.
I believe I was brushing my teeth, and so I was jumping up and down with a toothbrush in my mouth, screaming and yelling and trying to high five my spouse.
That's dangerous.
He was also jumping up and down.
Well, that's excellent. That's good.
It was a magical moment, and then the Yankees didn't show up for 2 games, which I honestly can't blame them too much after what Freddie Freeman did to them.
The
night before.
That sounds hard to recover from.
Yeah, but then they showed up for 2 more games, and the Dodgers won it out, and it was beautiful. It was lovely. I loved every minute of it.
Congratulations.
Thank you.
And then I have to ask, how instrumental, if at all, was Ohtani in this?
I mean, he's a great player.
Mm-hmm.
He had some good at-bats. He also got injured. So
Not good.
I would say he was not 100%. It was a team effort.
Okay.
Yeah.
Good. Glad Ohtani let them save some money for the other players.
Yes.
That's very important.
He made a very, very good decision with that contract and going to the Dodgers, and now he's got a ring.
World Series champs. Well, congratulations.
Thank you.
So today we're going to continue our ongoing conversation about the accounting profession.
Yep.
Yes, we've had 2 episodes now on declining accounting enrollments and the fact that accounting firms themselves may be partially responsible for this phenomenon by replacing certain tasks that humans used to do with technology. Today we're going to talk about something a little bit different. We're still talking about displacing U.S. workers, but instead of replacing them with technology, we're talking about replacing them with lower cost foreign workers. Okay, so that was the first reason that I'm excited today.
Oh, wow. We're all the way back to reason number 1? Okay.
I guess this is the second reason, because first we're together. Second, we're talking about the accounting profession.
Okay.
And third, we get to talk to our co-author and your PhD student, Kaitlyn Kroeger, which will be lovely.
It will be. Kaitlyn is very kind to take the time to come and talk to us. She's super busy right now. She's been presenting her work all over the place at conferences and also doing a whole lot of work on the job market since she is applying for academic positions for the next academic year.
It is a stressful time.
Yep. Maybe don't mention that to her.
Okay. I think she knows it, but okay. All right, so she's going to talk about her dissertation on accounting firms offshoring, and I actually think it's a super interesting topic.
I agree.
So let's dive right in with our goals for today. Number 1, we're going to explain what offshoring is and how big of an issue it is. Number 2, we're going to talk about some of the reasons that big accounting firms have started offshoring over the past 25 years. This is not a new phenomenon.
Nope.
Number 3, we're going to talk to Kaitlyn about her work, her dissertation specifically, that examines whether this offshoring behavior has impacted the quality of the work product that these audit firms are providing to their clients.
So I'm going to kick us off with the definition. When we're talking about offshoring today, what we really mean is that this is work that was previously conducted in the United States by U.S. employees, of an accounting firm. And now that work is being performed by non-U.S. employees, but of that same U.S. accounting firm.
Got it.
So these aren't independent companies overseas doing outsourced work. Rather, they're truly employees of the public accounting firm. They're just not based in the U.S.
Makes sense. And building off of that, many of these offshoring centers owned and operated by public accounting firms are in India.
Yes.
But there are also some other locations where they've been establishing these centers, such as in Latin America. And the key point is that they're working on the same work that is typically performed within the U.S. So we're talking about services and tasks like auditing financial statements, assurance, which I still don't think I know what that is.
Agreed.
And then tax services for U.S. clients.
Exactly. So this isn't an Indian affiliate of the firm doing these services for Indian companies. No. These are people who are based in India, but coordinating with the U.S. firm to do audits and tax compliance for U.S. clients. And this has become very, very common.
According to a study by Matthew Sherwood that uses proprietary data from the Public Companies Accounting Oversight Board, or PCAOB, more than 98%, so pretty much 100%,
yeah,
of the audits conducted by Big Four accounting firms are partially completed by individuals outside of the U.S., with offshored hours constituting about 9% of total billable hours on the audit. So the use of workers outside of the U.S., very common, but maybe they're not doing a ton of work. So a first obvious question to ask is, why is it that so many firms are doing this?
Yeah, and our 2 prior episodes on the accounting profession have been all about how accounting firms seem unwilling to pay higher salaries to accountants here in the U.S.
Yep.
Instead, opting, for example, for increased use of technology. So an obvious first answer to this first question is that paying a salary in India, turns out, is a lot cheaper than paying a salary in the U.S.
Yes.
So there's a substantial cost savings.
Agreed. There could be a huge cost savings, like you said. I also think there's something to be said for having someone working on a project whose working day hours are opposite of yours.
Great point.
You can spend your day working on things and then send them back to someone in the US who can monitor and review what you did while you sleep. They can provide feedback to you. And then when you wake up, you can start addressing their comments. So there is some nice efficiency there.
There is. And this is one of the main reasons that firms have stated that they started shifting towards this offshoring model, according to some interviews that Kaitlyn conducted for her dissertation.
Okay. So we know what offshoring is. You define that for us. We know at least some of the potential reasons why firms might want to do it: cost savings, efficiencies, being able to kind of utilize a 24-hour clock. But we also know that there's no such thing as a free lunch. So there's got to be some potential costs or downsides to this offshoring.
Yep. And that's exactly Kaitlyn's primary research question with her dissertation. One of the main concerns is that if you're hiring people who weren't necessarily educated in the U.S. on U.S. accounting standards or tax laws, then maybe the quality of their work may not be at the same level as someone who was trained in the U.S.
I can totally see that. And you can also add to that the fact that these people are being managed remotely. So
yes,
it might be a nice benefit to have someone working in another time zone, but then you can't actually give them that feedback in person in real time.
Right.
They're not in the same office as the people reviewing the work, and they're not interacting with the client. And they're located in a time zone that could make live conversations with their supervisors difficult, if not impossible.
Agreed.
So I think all of that means that the level of oversight that the offshore employees are getting from U.S. personnel could be limited, which again would potentially hurt the quality of the tax or the audit project that they are working on, or at least leave it to the U.S. person to sort of identify and pick up any deficiencies,
right?
Which could negate cost savings.
Right. Yeah, it's an excellent point. And so at this point, I think it's worth pointing out that even though we don't know what assurance is, we know what audits are.
We do.
And they're really freaking important. I mean, you think back on like Enron and WorldCom and other notorious companies that failed, in some cases causing their audit firm to also fail for not catching the misreporting that was happening. And this caused huge economic losses experienced by employees who lost their retirement funds in addition to their jobs in many cases, creditors of the company, investors in the company. So these audits really are important as an independent check on the company to help verify that the performance that they're reporting to shareholders and employees and customers actually reflects the true performance of the company.
That's exactly right. And because of the importance of these financial statement audits, accounting firms historically have touted the quality of their work product and their reputation as one of the biggest assets and value adds they have for clients, and the reason why they get to charge the high fees that they get to charge.
Exactly. So if they hamper the quality of the work they produce in any way, such as via offshoring, if there are negative consequences, that could really impact the firms and the profession as a whole.
Excellent. Does this offshoring hamper the quality of the work that the audit firms produce?
Let's bring Kaitlyn on to find out.
Our guest today is Kaitlyn Kroeger, a doctoral candidate in accounting at the University of Texas at Austin. Kaitlyn spent 9 years at Grant Thornton in Chicago prior to entering the PhD program. Her work experience mostly centered on accounting for income taxes, woot woot, and she primarily studies tax-related topics as an academic researcher. Kaitlyn will graduate in this coming academic year and is looking for a position as a faculty member. She's here today to talk about her dissertation, which examines the initial consequences of public accounting firm offshoring. Kaitlyn, welcome to Taxes for the Masses.
Thank you. I'm excited to be here.
All right, Kaitlyn. So Lisa and I both find this topic really interesting. Lisa obviously had to find it interesting because she's your chair. I find it interesting just because I'm really invested in what's going on with the accounting profession and some of the decisions that they're making. Can you talk a little bit about what made you want to examine this topic?
Absolutely. When I worked in public accounting, my firm went through this transition to offshoring. And I was fortunate enough that within the first few years, I actually had the opportunity to spend a year in Bangalore helping oversee the offshore operations there.
Wow. Okay.
And through that experience, I was able to see the successes, but also the challenges of offshoring. And once I shifted to an academic career, I was interested to learn more about this trade-off in making that decision to go offshore.
I love this. This is my favorite kind of thing. And this is why I think work experience can be so practical in academia, because you saw something, you saw challenges, and now you have the skills to see whether what you experienced was anecdotal to your firm or whether it's more widespread and something that lots of different accounting firms are facing. I love that.
Exactly. I decided to start with quality because not only, as you said, is it really important to audit firms, but also because I wasn't really sure what I would find.
Okay.
So as an international assignee, I often witnessed, conflicts or issues on engagements, and that was a large part of my job responsibility was helping communicate between the two teams. But on the flip side, in the U.S. as a tax manager, I felt like I was signing high quality, correct tax returns.
Okay.
Okay.
And so taking those both sides, I wasn't really sure if there would be an impact on end deliverable quality and wanted to learn more.
So we know you were there with Grant Thornton when they made this transition, so you know when they did it. But your study includes a lot of other public accounting firms, and they weren't all necessarily like broadcasting that they were doing this, right? So how did you go about figuring out the timeline of all these different companies making this transition?
I started with just talking with individuals who were familiar with offshoring. So that began with my own network, whether it was international assignees like me, former colleagues in India, or U.S. partners and firm leaders who actually led the launch of offshoring. I was lucky enough that I had individuals I identified through LinkedIn who responded to cold messages and even referred me to some of their friends.
Oh, that's cool.
And so I was able to talk with a lot of people about this and then reflect on publicly available data such as Indian incorporation records or stories, or even looking at LinkedIn profiles to see when individuals started their positions. As you've kind of noted, people in this industry are passionate about this topic, and I was able to learn a lot just by listening.
You are racking up a lot of good points here. Practical question with real implications, personal experience dealing with it. You talk to people who actually lived it and made the decisions. This is fantastic. So your research question is whether this offshoring affects quality. Can you talk a little bit about how you tested that question?
I took the information from my interviews as well as a survey I conducted of more than 100 current and former public accounting professionals.
Wow.
As well as with those publicly available records that I was able to find. Mm-hmm. And I constructed a timeline of when the largest firms started to go offshore, both for audit and for tax services. And then I used that timeline to consider if and how financial statement quality changed before and after the operations were shifted to India.
So 2 questions. When you saw firms starting to outsource, did they typically outsource both their audit and tax functions at the same time? Or did you see them sort of dipping their toes in the water with one and then following on with something else?
It depended. Most often, firms would dip their toe in the tax waters.
Oh, right. Yes.
And then expand to audit services. However, there were some firms that went all in at the same time.
Okay. Second question. Can you talk a little bit about how you measure audit quality?
Sure. The primary measure that I use is restatements.
That's a biggie.
Yeah.
Exactly. It's big and it's direct.
Yep. I like that you chose to lead with that measure because your goal is to get your financial statements materially correct, and a restatement is evidence that they were in fact not materially correct as issued. So I think that's a great measure.
Why don't you tell us a little bit about what you find?
First, I find that quality goes down when audit services are offshored. So I see... Exactly. I see an increase in restatements as well as some increases in SEC comment letters.
Okay.
After firms decide to go offshore for audit services. When I dig a little bit deeper into that restatement finding, which is the strongest, I find that the effect is concentrated in little r restatements. A little r restatement means that there is a collection of errors that make the financial statements incorrect. Okay. And therefore they need to be restated. Versus a big R restatement would be one big issue that is material to the financial statements.
One account that got really screwed up versus a lot of little small errors.
Yes, that are in aggregate.
Okay. Material. Yeah.
When I spoke with partners in charge of launching operations, some of them indicated that nothing goes well the first time with a new process.
Sure.
And that there's always lumps that need to be worked out along the way. And so I find that this sort of error is more indicative of that learning curve or initial overwhelm due to a new process versus one, material issue that is just being missed by all audit teams.
So that makes a lot of sense in your setting. Yeah.
So if I could try to restate see what I did there? Didn't even mean to do it. If I could try to restate what you just said, it's not necessarily that these services are being offshored that's the problem. It's that there's a disruption in the audit process that is leading to some growing pains that's causing these restatements. Is that a fair characterization?
I think so. In my study, I'm not able to test the specific level of offshoring at an individual client. I look at firm-wide consequences. Okay. And so I can't say whether it relates to the work that's offshored or if, say, a senior is distracted because of this new process and lets something else slide.
Right. Okay.
What do you find on the tax side?
On the tax side, I also find some decreases in tax-related financial statement quality.
And just so our audience is clear, you can't look at were there more errors in the tax return because you don't have access to tax return data.
Exactly. So I have to look at what is available on the financial statements, although fingers crossed, who knows what I might be able to study in the future.
So if someone corners you in an elevator and says, give us the biggest takeaways from your study, what you want readers, accountants, policymakers to know, standard setters to know as a result of your study, what would you say?
I would say that offshoring is certainly not something that is bad or should be avoided.
Okay.
But that it is an operational trade-off that accounting firms are making and may honestly be necessary due to the declining enrollments that you've talked about on the pod in the past. But that the increase in offshoring, both among the established firms who are continuing to expand, as well as the smaller and middle market firms who are just starting to launch these offshore models, could come with lower quality. And so I think that's interesting, both to the accounting firms, to academics like us, but also to potential regulators who are looking at the provision of professional services.
And I think it's important to highlight here that you're studying the initial launch. So it's a short-term effect. It's a learning curve effect that you're finding, as opposed to there's just this big step down in quality that persists for all of time.
Exactly. I find this effect in the first few years after offshoring is launched. And in some initial additional analysis that I do in the study, I find that firms are able to achieve the intended consequences. So I find evidence consistent with increased client fees, increased client count, as well as some increased value-added services, all which indicate that firms may be able to achieve what they were looking to by going offshore. And so I think it's important just to look at both sides of this trade-off. And I can't speak to the long-term consequences, but it's certainly possible that the benefits outweigh these initial quality implications.
I really appreciate that additional analysis, because a question that popped into my mind was, do you see these firms losing their clients after these little R restatements? And it sounds like you're saying you see client count increase. So it's not this situation where they're trying to chase a dollar, but they're costing themselves too.
Exactly. So I actually see relative increases in client count, and that would indicate to me that they have more labor capacity to take on additional clients,
right?
Not that they're losing clients due to these quality implications.
That's great.
So, most important question that we're going to ask you on the pod today: describe your dream academic position.
Can I be a podcast host?
Good answer.
If you have $75, yes. Yes, that is the barrier to entry.
And a little bit of time.
Yes.
Yeah. I probably need to grow into that. But I think ultimately I want to be at a place that supports my research so that I can continue to answer interesting questions like this one. I want colleagues that I can learn from, and I want to teach motivated students how awesome accounting and tax can be.
Good luck with that last one. Fairly confident you'll achieve the first two.
Well, thanks so much for being on with us today.
Really appreciate it.
Thanks for having me.
Best of luck on the job market.
So it's time for the good, the bad, and the ugly.
It is.
And I'm in spite of all events that have happened this week, I'm focusing on the positive.
Please do.
That you are here.
Yay. And
that it was just a lot of fun to talk with Kaitlyn today about her dissertation. And I say that having read it many times.
Yes, listeners, when your chair is still excited to talk about your dissertation,
it's a good sign.
It is a good sign. It's an amazing sign. But I can totally understand it, because I think this is an important research question. It's my favorite kind of research question because it's easy to understand. So huge implications here for the accounting profession, really rigorous tests that she's done, grounded in reality. I mean, A+. Well done.
Well, I got to give all credit to her. I love that she had this real life experience and found a very interesting question coming out of it.
Yes.
That, she's the best expert on the topic to research this because she lived it herself.
Yes, absolutely. So this is great. And also nice from a results perspective that it doesn't seem like this behavior is irrational on the part of firms. She is documenting only a temporary dip in financial reporting and tax quality that seems like it rebounds.
Yep.
It's not costing the firm's clients, so it's not substantially damaging their reputation. And I like how she framed the response to that last question. The increased client count suggests that this is doing what it's supposed to. It's increasing capacity,
right? Even
though we've got a decline in the supply of accounting professionals in the U.S. So it seems pretty smart.
I guess the sort of worrywart in me, I guess I'm starting to get to the bad. Is, okay, so I get it. We see that initial dip, but it's short term and then it goes back up. I do understand there are benefits of this change that these companies are making, but it's still like if audits are so important to the economy, is that initial dip worth the benefits? And I don't know the answer. If they're little R restatements, then maybe it's not that big of a deal, but that's still restatements. And I was told anytime there's a restatement, an accountant loses their job. So
every time a bell rings.
It is
yes.
though. Yes. And some poor accountant loses their job.
Yes.
And yeah, that makes me sad.
I agree with that. And so I guess another thing I liked about the way that Kaitlyn framed her results is that it's an operational disruption. So let's say that this was a technology displacement instead, would we see the same thing? What I really appreciate is that she took the care to say that it's not necessarily the offshoring that's the problem.
Yes.
Maybe if we tried to automate bank recs, we'd have the same issue. But you're right. It is important to think about the holistic long-term consequences. And she's racking up points because somebody else can go do that.
Yeah.
She can start it and then another paper can follow on and try to quantify the whole thing.
But I agree with you. It's any operational change like this, whether it's a switch in technology or a switch in the personnel, like I think her study raises that broader implication of there's going to be a learning curve and you got to understand, is that cost worth the benefit? And
maybe her study can give firms some indication that this is coming. Maybe they can plan around it a little bit better.
That's the hope, right?
Yeah. So I guess another bad here is I believe she mentioned that she also sees, increased fees, right? Increased audit fees. So then that raises the question, you're saving money. You're not passing it on to the clients, it doesn't seem like.
No, they're not.
And so I wonder, and I should have asked this, but I wonder, does a client know that 9% of their billable hours are going to someone who's not in the U.S.?
I think some must know because I keep going back to 98% have some involvement. It's the 2% that keeps me up at night. Like they know something. To me, that sounds like some clients are like, no, we're not going to pay for that.
Exactly.
We're not going to do it.
Exactly.
Don't pull that over on us, right? And so I think at least some clients know. I don't know to what extent they understand, but I think they know that this has been going on.
I think this is another follow-on paper because if you are subjecting me to a potential little R restatement, that's going to be costly for me.
Yes.
I'm going to be a little annoyed that you didn't pass on some of that savings that resulted in that little R restatement my way. Okay. That's paper number 2. Ugly. What do you got?
Just, I don't know what this means for the profession as a whole, right? Like we started off the episode by saying like, we've talked about this switch to technology and that's why accounting firms aren't hiring US employees anymore. Is it also because it's so much cheaper to offshore? And if so, what does that do for our declining accounting enrollments and our declining number of accounting professionals here in the US? I don't think it helps.
I would agree with that. And I am just full of questions today. Does the SEC have anything to say about this? PCAOB? Are any of the standard setters worried? Because to your point, a little R restatement is still a restatement. We'd still rather not have it.
Right.
So I wonder, is this going to be an opportunity for some regulation around this?
Potentially. I mean, I think in the next 4 years, we're not going to get much regulation at all.
I didn't want to go there, but yes.
So we can table this conversation.
Okay. It's another question. This is the paper that keeps on giving.
Can we talk about the Dodgers again?
Yes, please, always. And I hate baseball.
Well, that's all we have time for today.
Be sure to join us for more tax nerdery on future episodes of Taxes for the Masses.